profit taking. In
Yes.
fact, of course, some bit of nervousness around increasing border tensions between India and
Yes.
Pakistan, and those jitters were clearly visible, given the fact that at one point in time the Nifty was down quite a bit, 2% or so, but we
Yes.
did manage to pare some of those losses. In fact, the Nifty recovered over 200 points from the day's low. The Sensex as well, recovered almost 800 points from the day's low. Broad end of the markets were badgered, 3% kind of cut,
Mm.
but even they managed to pare some of the losses. In fact, the Nifty Mid Cap Index still ended lower by 2.5% or so. But important point to note, Yatin, we are still in the green for the week.
Yes.
The Nifty is up 1%, third straight week of gains, and the mid cap index has managed to outperform with almost 2% gains this week. But I think lots of jitters
Yes.
around how India is going to reply, whether there will be any military action against Pakistan in the wake of the Pahalgam attacks. Some firing also happened
Yes.
overnight from the Pakistan side, and there are reports that Indian side also retaliated.
Mm.
So in the wake of that, of course, diplomatic ties have already been downgraded.
True.
But now, how or what's the scale of escalation we look at here on, that will decide the course. But till then, I think markets will remain volatile. But looking at today's action, Yatin, lots of earnings as well. Maruti came out with numbers
Yes.
disappointing on the
Yeah.
margin front.
Clearly. Clearly.
High costs weighed in on margins. Even Shriram Finance, Yatin, NII profit below estimates. Although asset quality saw some improvement, but the provision coverage ratio
Yes.
was down, and we saw 5% further cut on the stock of Shriram Finance once it came out with numbers. But sectorally, IT was one pocket that managed to stage a turnaround. In
Mm.
fact, that sector ended higher by 1.5% for the week as well. The Nifty IT index is up 7.5%.
True.
Yatin. In terms of individual movers, SBI Life on the back of good numbers and good brokerage verdict as well. The stock was up 5%. TCS, Tech Mahindra, Infosys from the technology pack did well. Ultratech Cement as well did well. On the flip side, Shriram Finance, Adani Ports, Trent, Axis Bank, Eternal, these were the top laggards. But Yatin, from the broader end of the markets, also quite a few numbers came out, and there were quite a few
Yes.
reactions on that
Mm.
front as well. Take us through them.
So, if you look at the mid-cap end of the market, Nandita, it was the worst impacted. The kind of tensions between the neighboring countries, India and Pakistan, is something that the markets now feel could be a near-term event, and hence there was some unwinding of positions there. If you look at the mid-cap index, that was down nearly 2.5%, was down as much as 3.5%, 1,400 points down on the mid-cap index. Small-cap index also lost quite a bit, and this is the reason why the advanced decline ratio was almost 1:10. So one stock gaining and 10 stocks declining on the stock exchanges. In the result reaction, SBI Life obviously 5% higher. That was a top Nifty gainer. But Atul Limited post numbers moved 3%. Naveen Fluorine recovered smartly, 2.5% higher for that stock. Emphasis reacting to numbers saw some 3% gain. But what was not doing well, Motilal Oswal Financial Services reported a loss for the quarter, and hence the stock was down 8% in trade. Following suit, Angel One also reacted, to its peers' earnings. That was down 7%. DB Realty, GRSC, Reliance Power are the other stocks which saw some profit taking 6-7% down for each of them.
All right, lots of results, reactions to take stock of. Also, the fact that Index Heavyweight Reliance will be reporting numbers. We'll take stock of that. Yatin
Yes.
will be filling us in on what to expect. But quickly take a look at SBI Life. Of course, 5.5% up at one point in time when the markets
Hmm.
opened. The stock was up almost 10%.
Yes.
Good numbers. Value of new business was up 10%. Double-digit growth there. VNB margins came in excess of 30% vis-a-vis 28.3% in the same quarter last year. That was also a beat, and the company per se has managed to outdo its peers like HDFC Life. If you look at the annualized premium equivalent, that was up 2.2%. The management has, in fact, given out some comments in an interview with CNBC TV18, wherein they've said that they are expecting a 14% growth in individual annual premium equivalent for FY26, and that will be supported by expansion in its branch network, agent force, as well as overall investments. The company has said that it is satisfied with the overall growth in the individual annualized premium equivalent during the fourth quarter, and it expects total annualized premium equivalent of 12% in FY26. Of course, the VNB margin has been driven by change in product mix and high sum assured protection products as well. Even look at the non-participating policies, typically higher margin for SBI Life. It has grown by 51% during the quarter. Although the contribution of ULIP in Q4 was muted due to volatile markets and, of course, launch of traditional products. The company has, in fact, guided for 27 to 28% VNB margin for FY26. Street has, of course, given a thumbs up to the numbers. Jefferies has a buy call. Target price is at 2,000 rupees. And also, they've said that management is expecting double-digit sales growth going forward, and that could be a trigger for re-rating when the stock, where the stock is concerned. They have upped their VNB margin estimates by 7%, but they feel that valuations, are such that they limit upside potential going forward. Nomura, on the other hand, buy call. Target price is at 1,800 rupees. They've noted the fact that the company has managed to outpace peers like HDFC Life and ICICI Pru Life. Motilal Oswal, in fact, is expecting SBI Life to clock a CAGR of about 15% and 17% in its annualized premium and the VNB over FY25 to FY27. But they've slightly cut their annualized premium equivalent estimate, but increased their VNB margin estimate due to an expected shift towards traditional products and improvement in product level offer margins as well. But the stock has run up quite a bit, Yatin. If you look at the YTD gains, it's up somewhere around 21% or so. So yes, I think Jeffries has pointed out that valuations at this juncture limit any meaningful upside from here.
Absolutely, and that is the reason why from the days high we saw some bit of profit taking, but yes, the guidance for FY26 is quite good. They are expecting double-digit growth there, and probably the reason why the stock has given a positive reaction to the earnings as well. But moving on to Reliance Industries, and they will be reporting the numbers. Numbers are expected to come in closer to 7:30 p.m. today. Now, if you look at the numbers sequentially, it will be a quarter wherein we could see a stable kind of a number. The revenues are expected to be close to 1% higher at 242 lakh crores. Profit, however, would be down by nearly 2% to come in at 18,150 crores, similar to a level almost of the last quarter. Now, EBITDA, obviously, the margins are expected to remain stable at 18.1%. Absolute EBITDA is expected to be close to 44,000 crores. Obviously, the results, the reason why they are almost flattish on a quarter-on-quarter basis is the oil and gas segment. The O2C segment is muted. There was volatility in crude prices. Clearly, that would weigh in on the results. But for Reliance Jio, things would look up. If you look at Jio's EBITDA, that is expected to rise nearly 2% sequentially, with a ARPU number that I'll be looking out for would be 206, which was almost at a level of 203 rupees 30 paise last quarter. So a good improvement in ARPU is seen for Jio. For retail business, sequentially numbers won't be that comparable, because last quarter we had Diwali and Dussehra, the festive period, because of which the base is much higher. However, if you look at it on a year-on-year basis, 10 to 15% kind of profit growth, EBITDA growth could be expected. Obviously, the trajectory on the new store addition, the kind of plans that they have for IPO or any kind of unlocking would be watched out for. But broadly, expect a stable number for the fourth quarter as far as Reliance is concerned on a consolidated basis.
All right. Of course, Jio expected to drive earnings, impact of the tariff hike as well,
Yes.
Expected, and better ARPUs for the company. But stock-wise also, the stock has done pretty well if you
Yes.
look at the YTD basis. And when I was talking to technical experts, they're pointing out that 1300 level is crucial, and
True.
near-term targets have been maintained at 1400, according to technical analysts. On the other hand, we had SBI Card. Not great. Numbers have not been great, and the stock did see a reaction. Stock was down 6.5%, but mind you, the stock has been doing pretty well. Looking at the performance on a YTD basis, it's up almost 27 to 28%. But I think that has been halted. The run has been halted by the kind of earnings it has handed in. Profit has dropped almost 20% on a YY basis, but on a quarter-on-quarter basis, it has seen a good improvement of somewhere around 40% or so. Revenues are up 7.5%. Margins have also grown 11.2% vis-a-vis 10.9% on a YY basis. Annualized credit cost has come in at 9% vis-a-vis 7.6% on a year-on-year basis. But on a quarter-on-quarter basis, it has dropped 40 basis points from 9.4%. And that's something that some of the brokerages have pointed out, that there could be a turnaround in the credit cost trajectory. And that is being seen as a positive. But the normalized rate of 6 to 7% is still some time away. Even the management has pointed out that although credit costs have come down, but they're still far away from that normalized run rate of 6 to 7%. And even Jeffries has pointed out that not Jeffries, sorry, Morgan Stanley has pointed out that this cooling off, some bit of cooling off in credit cost may be positive, but the timing and normalize and when it will reach normalized levels is something that remains uncertain. In fact, management has also said that the early delinquency trends have seen some bit of improvement if you see on a quarter-on-quarter basis, and that could also be construed as a positive according to Morgan Stanley. It has an equal weight rating. Target price it is at 775 rupees per share. Aside of that, CLSA has downgraded the stock to underperform, target price of 800 rupees. It has noted that credit cost has come down on a quarter-on-quarter basis, but it's still 200 to 300 basis point higher than the run rate levels that that would mean a normalized level. Loan growth too, according to CLSA, has moderated from 25% in FY24 to 10% in FY25. If you look at some of the other brokerages, they have maintained their ratings that they had. MK has retained its ad rating, but it has raised its target price by 11% to 1,000 rupees from 900 rupees. But another brokerage that has downgraded the stock is Kotak Securities. It has downgraded the stock to ad, target price of 950. So all in all, there's some bit of cool off because the company itself had said that credit cost had peaked out in the December quarter. It has seen some bit of reversal, but when it comes back to those normalized levels of 6 to 7%, that will be the key catalyst for the company going forward. But for now, the management has said that they are kind of far away from that normalized level of 6 to 7% on the credit cost front.
Absolutely. And I think, SBI cards, the issue is that the credit cost and the asset quality, in the period of slowdown, probably people are expecting it to accelerate and worsen off. Given the fact that brokerage targets are still above the market price, the stock was doing well so far. I think today's correction clearly shattered those long-term investors, 7% downtick for a stock which is doing well so far, from levels of 600, 650. The stock gradually rallied over the last few quarters to these levels. But I think the results are clearly weighing in on the stock price.
Most definitely, the stock did see a 6 to 7% kind of cut. But then I think with that, we've come to the end of this edition of Closing Bell. Of course, there are jitters going forward, headlines from US in terms of tariff, and of course, most importantly, what happens on the tensions, border tensions, and what kind of updates we get from that front. That will be very crucial to watch going forward, and that could lead to some bit of volatility in the coming week as well. But with that, completely timed out on this edition of Closing Bell. Thanks a lot for tuning in. Have a good evening, have a good weekend. And of course, Reliance numbers awaited, and I think we'll be covering it on Avaz. So don't forget to tune in for that as well. Thanks a lot for watching.